Let us start with a number everyone heard. The Social Security Administration announced a 2.8% cost of living adjustment for 2026. For the average retiree receiving roughly $2,015 per month, that translated into an increase of approximately $56 per month, bringing the average check to about $2,071. On the surface, that sounds like real financial relief, especially since last year's adjustment was only 2.5%. The Social Security Administration stated that about 75 million Americans would see this increase beginning with their January payments. For SSI recipients, the first adjusted payment arrived on December 31st, 2025. The numbers were real, the increase was legitimate. But here is where the story changes and why so many seniors felt deceived even though nothing illegal happened. Medicare Part B premiums did not wait for permission. The Centers for Medicare and Medicaid Services announced in November 2025 that the standard monthly premium for Part B would rise from $185 to $202.90 in 2026. That is a $17.90 monthly increase, representing a jump of nearly 10%. The Senior Citizens League called it the second largest Part B premium increase in the program's history. And because Medicare Part B premiums are automatically deducted directly from Social Security checks before the money ever reaches a retiree's bank account, millions of people never touched that $56 raise. Nearly 1/3 of it was already gone. The net benefit for the average retiree was approximately $38 per month, not $56. For seniors with lower benefit amounts, the effective raise was even smaller, and for some, it was essentially nothing at all. The Senior Citizens League stated plainly that Medicare Part B premiums have now risen faster than Social Security's cost of living adjustment for 3 consecutive years. In 2024, the premium increase was nearly double the COLA. In 2025, it was more than twice the COLA, and in 2026, the premium rose at a rate more than 3 times the COLA adjustment. That pattern is not coincidence, and it is not temporary. It reflects a structural problem that Congress has discussed for years without solving. As one senior advocacy leader put it, this is precisely why so many older Americans say their benefits do not feel like they are keeping up, even when the numbers technically go up every year. And the problem grew worse as 2026 progressed. By April and May of this year, new inflation data showed the Consumer Price Index for urban wage earners and clerical workers rising at an annual rate of 3.9%. The 2026 COLA was set at 2.8% based on inflation data from late 2025. That gap matters more than most people realize because fuel prices in 2026 have risen sharply and driven costs higher across almost every category of spending. Groceries cost more, transportation costs more, utility bills have climbed. The 2.8% raise that was calculated based on last year's inflation is already losing ground against the reality of prices today. Analysts at multiple financial outlets have noted that seniors relying primarily on Social Security are effectively falling behind in purchasing power in real time this year, even after receiving what appeared to be a raise. Now, here is what Washington did give seniors in 2026 that most people either do not know about or are not yet claiming correctly. When President Trump signed the legislation known as the One Big Beautiful Bill Act into law on July 4th, 2025, one of its provisions created a brand new tax deduction specifically for Americans age 65 and older. This is not a revised credit or a renamed benefit. It is a new additional deduction worth up to $6,000 per person or $12,000 for a married couple filing jointly, and it runs for tax years 2025 through 2028. For the 2025 tax year, which was filed in early 2026, eligible seniors could claim this deduction for the first time. For the 2026 tax year, which you will file in 2027, it remains fully available. To receive the full deduction, a single filer must have a modified adjusted gross income of $75,000 or less. For married couples filing jointly, the threshold is $150,000. The deduction phases out gradually above those limits and disappears entirely for single filers earning above $175,000 and joint filers above $250,000. What makes this deduction important to understand clearly is that it does not work the way a tax credit works. It reduces your taxable income, which in turn reduces the amount of federal income tax you owe. It does not automatically appear as a refund check in your mailbox. You must actively claim it when you file. The Council of Economic Advisors estimated that approximately 33.9 million seniors may qualify, with an average increase in after-tax income of around $670 per eligible taxpayer. At a 12% tax rate, a $6,000 deduction saves approximately $720. At 22%, it saves $1,320. The deduction stacks on top of the regular standard deduction and the existing additional standard deduction that seniors have always been eligible to claim. According to IRS guidance, a single filer over 65 in 2026 could potentially claim a combined total deduction of approximately $23,750. For a married couple where both spouses are 65 or older, that combined figure rises substantially higher. There is one critical point that financial advisors have been warning about since this provision passed. The deduction does not reduce your modified adjusted gross income, meaning it does not change the number Medicare uses to calculate whether you owe IRMAA surcharges, which are the higher Part B premium amounts charged to higher income beneficiaries. If your income already crosses the IRMAA threshold, the senior deduction will reduce your tax bill, but it will not reduce your Medicare premiums. These are two separate calculations, and mixing them up can lead to unpleasant surprises. Your MAGI for Medicare purposes is calculated before the new deduction applies. Speaking of Medicare premiums, there is a provision most seniors do not know exists called the income-related monthly adjustment amount, and in 2026, the base threshold for triggering it is $109,000 in modified adjusted gross income for an individual or $218,000 for a married couple filing jointly. The MAGI figure Medicare uses is from 2 tax years ago, meaning 2026 Medicare premiums are based on 2024 income. If you sold a home in 2024, took an unusually large retirement account withdrawal, or had any one-time income event that pushed your 2024 earnings above those thresholds, you may currently be paying a Medicare premium well above the standard $202.90. Those premiums range from $284.10 per month all the way up to $689.90 per month depending on income bracket. If your income dropped significantly since then due to a qualifying life event such as retirement, the death of a spouse, or a major reduction in earnings, you can file Form SSA-44 with the Social Security Administration to request a premium reduction. Many seniors who qualify for this relief have never been told it exists. Now let us talk about Medicare drug prices, because this is genuinely good news unfolding right now, though most people are not watching it closely enough. Under a 2022 federal law, Medicare was given the authority to negotiate prescription drug prices directly with pharmaceutical manufacturers for the first time in the program's history. The first round of negotiations covered 10 drugs, and those lower prices went into effect in January 2026. Eliquis, widely used for blood clot prevention, dropped from $521 to $231 for a 30-day supply. Januvia, a diabetes medication, fell from $527 to $113. Across all 10 negotiated drugs, out-of-pocket costs for Medicare Part D enrollees dropped by roughly 50% on average. If you take any of these 10 medications and you have not verified with your Part D plan that the new 2026 negotiated pricing is reflected in your current cost sharing, call the number on the back of your Medicare card and ask specifically whether your plan has applied the negotiated 2026 rate. The savings are real, but they are not always automatic at the plan level. A second round of negotiations is currently underway, and the deadlines fall this summer. The negotiation window for a new group of drugs, which includes the weight loss and diabetes medications Ozempic, Rybelsus, and Wegovy, is scheduled to conclude on August 1st, 2026. The new negotiated prices for this second group are expected to be published on September 1st, with those lower rates taking effect in 2027. If you or a family member has been avoiding these medications purely because of cost, or paying significant out-of-pocket expenses for them today, The final pricing that will govern your 2027 access is being set right now during negotiations happening this summer. There is one more change that is already affecting seniors who are still working part-time and whose adult children or grandchildren work jobs with overtime hours. For the 2026 tax year, workers who receive overtime pay can deduct up to $12,500 of that overtime compensation from their federal taxable income, with the cap rising to $25,000 for married couples filing jointly. This deduction applies only to the overtime premium portion of earnings, meaning the additional compensation earned above the regular hourly rate for hours worked beyond 40 per week. Starting with the 2026 tax year, employers are required to report overtime pay as a separate line on the W-2 form, making the deduction significantly easier to claim correctly at tax time. For 2025, many workers had to calculate this manually from pay stubs. That process is being simplified. This deduction is set to expire after 2028 as well, so understanding it now while the window remains open matters. Here is the complete picture of where things stand right now in the summer of 2026. Social Security checks are larger than they were a year ago, but Medicare premiums took back nearly a third of that increase before the money arrived. Inflation is now running faster than the COLA that was calculated last fall, meaning seniors are losing ground in real purchasing power even after the raise. A new $6,000 senior tax deduction exists and must be actively claimed on your tax return. It does not show up automatically, and it will not help anyone who does not know to file for it. Medicare drug price negotiations are delivering real savings on 10 medications today and are in the final stages for a second group right now. And for anyone still working or with family members who work overtime, 2026 is the first year that overtime pay appears separately on the W-2, making a valuable new deduction much easier to take advantage of. If you have a Medicare Part D plan and you take any of the 10 negotiated drugs from the first round, verify your pricing now. If you are 65 or older and you filed your 2025 taxes without claiming the new $6,000 senior deduction, speak with a tax professional about whether an amended return is appropriate. If your 2024 income was unusually high due to a one-time event, and you are paying elevated Medicare premiums in 2026, look into Form SSA 44. And if you have family members working overtime jobs this year, make sure they understand that the deduction exists and that their 2026 W-2 will show it clearly for the first time. Share this with every senior you know. The information is public, but the way it is scattered across government websites, news articles, and IRS guidance means that millions of people who need it most never find it in one place. The system does not send letters explaining what you are missing. It relies on you to find out on your own. That is exactly why this channel exists.